Hi, I'm Diana Abel, and this is my presentation for this assignment, individual assignment. The assignment has two parts, so I'll start with part A, which we are trying to ascertain the importance of the statement of income and the cash flow and its benefit to investors. So, the balance sheet, it provides the financial situation of a business as a whole, but doesn't go into in-depth analysis of how the business health is. And the income statement gives a break of the revenue and the expenses of the business and gives the component in which an investor is able to determine the profitability of the business. This means that the feelings of an income statement come directly from the ledgers and journals of an accounting book. We find that investors find the information very invaluable as they find information about sales, retained earnings, gross profit, and operating income. And when investors have this, they can discern the crucial information on the company interest, and they are able to compare the market performance of a company over 2 periods, which is not the same as if you use a statement of financial position. Investors will then be able, using an income statement, to determine the growth in terms of sale and other incomes of a company. In summary, an income statement provides information to the investors that can tell the financial health of a company. However, this is not always the case because an income statement, depending with the accounting method used, can be used an accrual method where they are able to take into account receivables and account payables or expenses. These are like account receivable is not cash yet received, but it is cash earned, and it will give a state of affairs that is not really a true picture of a company, as the company does not really have that cash, which can not be a true representation of the company. Going to a cash flow statements in a company, we can define cash flow statements as the motor of any engine in a company, and they are used to measure the money coming in and out of a business, and this keeps track of any available money that is in the business that can be used to buy assets or pay for expenditures. Cash flows can be divided into 4 parts, that is operating cash flows, investing cash flows, financial cash flows, and net cash flows. Operating cash flows are cash flows that are used to pay for day-to-day activities of a business, such as paying rent, income such as selling of goods that the company provides, while investment cash flow is cash flow that comes out of buying assets or selling them. Financing cash flow comes from it is the cash flow between the investors, the business, and the people who are creditors, such as money that you borrow, money that is invested, or money that you have saved from paying less on a debt. Net cash flow is the total sum of negative cash flows and positive cash flows, such that it can be either positive or negative. If it's positive, it means a company has more inflows than outflows, while if it is negative, it means the opposite. Cash flows are advantageous because they show the profitability position, the liquidity position, the optimal cash balance, and the cash management of a company, and therefore an investor is able to determine how liquid is the company and how they are able to manage their expenses and incomes. While on the other side, it is incapable of used as a good measure since it doesn't take into account non-cash items such as depreciation, so that you will find that the net profit and operating cash inflows are really different. Going to question 2, we have a lot of tables in this one, so I'll keep referring to tables, but you will see them in my assignment. And we are going to look into the consolidated cash flows of 3 companies: BHB Limited, Santos Limited, and Fantastic Limited. And our first question is to understand what is the major income of this business. The major income or sources of cash flow from BHB are net income and funds from operations. While investing, they invest in maturity of investment. That's how they get their investment income. Santos also gets its money from operating net income and funds from operation. Its investment income comes from sales of fixed assets and businesses. Funtastic, on the other hand, has its operating income from net income and sale of common and preferred stock, proceeds from stock options, and reduction of a debt. BHB uses its cash for account payables, account expenditure, and repurchase of common and preferred stock, while Santos has used his money majorly as seen in these tables from deferred taxes and capital expenditure. Funtastic has inventories and account payables, capital expenditure, and issuance of debt, and this is its major issuance of debt. And when we go to question B, is trends of cash flow. How do you look at the trend of cash flow? As in accordance to the table that we have for question B, we can realize that for BHB and Santos, the cash flows are really positive and they increase from 2017 to 2019, with 2019 having the highest. While for Funtastic, this is not the case. They have negative cash flows, which also increased in 2018, having a negative 10 million, while in 2017 it's negative 8 million, while in 2019 it's negative 2 million. In question C, give me a minute. Question C, we are comparing the operations and net cash flow of BHB such that we are comparing the profit after tax and the income statement. Both the cash flow and the income statement of BHB increase over time from 2017 to 2019, but the cash flow is higher than the operating income. This means that the cash from operation is higher than cash outflows, and particularly the funds from the operation as a major source of the cash flow is higher than accounts payable, which is a cash outflow, and at the end the starting value, which we call the net income, is lower than the finishing value, which is a cash outflow. The next question is asking whether the firms were able to generate enough cash from their operations that they were able to pay for the cash flows, for the capital expenditures. Both BHB and Santos have had positive cash flows, and they have been able to use their money to pay for capital expenditure. But this is not the same for Funtastic, as it has had negative cash flows. Funtastic has also have negative free cash flows over the 3 years as compared to BHB. This means that Santos and BHB has been able to have free cash flow which is sufficient to cover all the expenditures, which is not the same for Funtastic. The next question is to determine whether they were able to use their cash flow to pay for their dividends, and BHB and Santos, as said before, were able to pay for their dividends using the cash flow from operation from 2017 to 2019, but this has not been the same for Santos. For Funtastic, not for Santos. Our next question is the firm has generated excess cash from operation, and how did they use the excess cash, if they had any? BHB and Santos have had excess cash flow as presented in the tables that we will see in my working, and the excess was used in capital expenditure. However, Funtastic was only able to use its excess cash flow to buy common and preferred stocks, or they were getting excess cash from preferred stock options. Were the firms able to use their working capital, that is the current assets and current liabilities account? The working capital for 2017 and 2018, as shown in the statements for BHB, were positive, and there was a high likelihood they were used in 2019 as the source of each cash, and the value is positive unlike in 2017 and 2018. as we head towards our last questions, it asks, what was there a major change in the cash flows as we see through this year in the farms? They were majorly affected in all the farms due to investments, such that there was high capital expenditure all across the 3 farms. And lastly, the question asks, what was the trend in capital expenditure for each farm? For BHB, the trend keeps increasing from 6 million to 9 million in 2019. Santos, the